Hello everyone, welcome with a new show from the Market Sentiment with a new episode with Anthony from Economy. Hi Anthony, how are you?
Hey Tim, doing great, thanks.
Okay, nice. Today you're gonna show some thoughts you have on the market, like the Bitcoin halving, the countdown, the supply from Bitcoin, also the Fed, what they gonna do or maybe possible gonna do. Yeah, I'm very curious to see what you have to say, what your analysis, and yeah, we're gonna work with your charts and discuss the possibilities where the market can go.
A
Good?
lot to get through today. I think since our last meeting, a lot has happened outside of the
Yeah,
cryptocurrency market, more on the macro side of things. So yeah, we'll go into the Bitcoin halving event. It's only 193 days away now, so we're getting very
crazy.
close to the next supply shock. Outside of that, though, we're going to focus a bit on what the Federal Reserve are doing, where interest rates are going. Yields are currently surging, putting a lot of downside pressure on the majority of all risk assets as well. So yeah, plenty to get through today.
Yeah, nice. What is the first thing you want to talk about?
I think it's good to put the halving into perspective. So we probably want to get up the recent article that I posted on the Economy blog
Okay,
about the Bitcoin halving event.
perfect. You can share your screen if you want.
Yeah, sure.
Okay. Yeah, it's very interesting to see what the market is gonna do. It's not far away anymore. Uh,
Great. Can you see my screen?
yes, yes, now I see it.
Perfect. So
Perfect.
this was posted, I guess, at the start of the week. So there was roughly 195 days until the next halving event. This is going to be the fourth halving event. Okay. And it's where the rewards that miners receive are going to be cut in half again by 50%. Now, this graphic really puts the or the halving events into perspective.
Mm-hmm.
We've only had three halving events so far, the third one being in 2020, where the rewards were cut from 12.5 down to 6.25 Bitcoin per block. In the next halving event in 2024, around April, the rewards are going to be cut from 6.25 Bitcoin per block down to 3.125 BTC per block.
Mm-hmm. Mm-hmm.
Another major supply shock coming into the market. And to really put things into perspective, by 2032, the rewards that miners are going to receive per block is going to be less than one BTC. So within the next 10 years, miners are going to be competing for less than a Bitcoin to, I guess, per block. And in such a short period of time, those rewards have been condensed down or cut down in a very short period of time. And if we just scroll down here, the last halving event isn't going to be until the year 2136. And you can see miners then are going to be competing for, a Satoshi, which is, when you put it into perspective, that's a minuscule amount of Bitcoin at that time.
Yeah,
And the
indeed.
last Bitcoin, I believe, won't be mined until the year 2140. So, I
Yes,
guess at the
indeed.
moment, the real
Mm-hmm.
race, everyone is, the Bitcoin network hash rate is at record highs. People are accumulating this technology to mine Bitcoin, and they're racing to see who can accumulate as much Bitcoin as possible. Even BlackRock have been investing in these Bitcoin mining companies in the US as well behind the scenes. So, yeah, that really puts the rewards and the halving events into perspective.
Yeah. Do you think miners can come in the problems because of the low Bitcoin prices? Because we have now, yeah, a Bitcoin price of like we could say 30K. It's around that number, but the rewards are less because of the low Bitcoin price.
Yeah, that's if we take the price aside for a second, what's
Mm-hmm.
going to happen towards the tail end of mining Bitcoin is it will move to more of a transactional reward system where the
Mm-hmm.
miners are receiving the majority of their fees from transactions rather than from unmined Bitcoin. So once all the Bitcoin has been mined, the miners will still need to be online to support the network, but they're going to receive Bitcoin from transaction fees rather than in fresh unmined Bitcoin. But going back to the price of Bitcoin, this bear market was particularly interesting because it's the first time in Bitcoin's history where we had an energy crisis where oil was at $100, north of $100. We had an energy crisis, and we also had a bear market at the same time. So not only were the miners being squeezed in terms of their rewards, they were also being squeezed in terms of the price they were paying to actually mine Bitcoin as well. So that's why it was a double-edged sword, this bear market, and why if oil does continue going higher and if Bitcoin stays relatively low, it will put further pressure on some Bitcoin mining companies. However, if you take a look at companies like Riot in the US, they actually receive roughly 38 million in power credits from the grid, because not only do they mine Bitcoin, but they also provide grid stability, especially in the US. When they had their last heat wave, the Riot managed to provide the Texas grid with a lot of energy. They were able to divert their energy away from the Bitcoin miners back towards the grid, which really helped stabilize the grid and provided energy for people in the US. So, you know, not only are you mining Bitcoin, people think it's energy intensive, but it does support other areas of the market and it can provide grid stability. So it is actually a necessary or a useful tool to mine Bitcoin when you're providing that stability to the grid.
Yeah. Besides that, we saw also that the Bitcoin ordinals for the NFT market and that kind of stuff created a lot of transaction rewards for the Bitcoin miners. I think if the usability on Bitcoin gets bigger, like Ethereum does also, yeah, the Bitcoin miners get another yes, reward model, like they say. And it could be very interesting to see what's gonna happen with the Lightning network on the Bitcoin network and the other networks that use for the or built for the scalability. Yeah.
No, yeah, I agree. Those types of transactions are also going to help fuel the next kind of transaction and activity on the network, which will supply the miners with a new reward system for sure.
Okay.
Now, if we pair the halving event and the rewards against the price of Bitcoin, this also really puts it into perspective in terms of how the halving event impacts the price of Bitcoin. So in the black line, we obviously have the price of Bitcoin since inception. The orange line is the rewards that miners are receiving. Now you can see that, I guess it's, you know, just under halfway through a bull market. So we have a market low, we start rallying higher, the halving event causes a supply shock, and then we get a major blow off top in the Bitcoin market. So the first halving event was in 2012. Rewards were cut from 50 down to 25 BTC. We then had a major Bitcoin bull market. We then had a cooling off and a bear market. The next supply shock, the next halving event in 2016, rewards went down from 25 to 12.5, and the third halving in 2020, where rewards went down from 12.5 to 6.25. So the halving event does really impact the supply of Bitcoin going into the market. And if we consider the sheer number of halving events that are due to come still, that would signal a ridiculously bullish trajectory for Bitcoin based on the decrease in supply of Bitcoin going into the market. Now, Bitcoin is interesting because I guess the definition of deflation is increasing your purchasing power, which Bitcoin actually has. But Bitcoin is inflationary, but it is controlled inflation. It has a reduction of inflation every 4 years, and it has a hard cap on that supply. And this is where it really is a lot different to fiat currency, which has an unlimited supply. It can be printed out of thin air without the use of any energy or any intensive exercise. You know, it's just printed with nothing back in it at the moment.
Okay, nice.
So yeah, halving event there. Post halving, I think it's a good idea to touch on what's happening with the Federal Reserve, with interest rates.
Yeah.
I think over the last couple of webinars we've done, Tim, I've kind of mentioned how important the DXY is to the price of Bitcoin, and why it's crucial to monitor what's happening with the US economy, with the US dollar index and the Federal Reserve, because that will have ramifications for Bitcoin and digital assets as a whole. Now, what we're seeing is a major breakout of a cyclical negative trend on interest rates. So a major tailwind for Bitcoin is the possibility of higher interest rates going forward over the next decade. So if we've actually exited this negative trend of interest rates and we're going to continue to see higher highs and higher lows on interest rates, that could be a major headwind for Bitcoin and risk assets as a whole. So we're seeing interest rates surge to the upside. And on the flip side of that, we're seeing the value of bonds dramatically crash at the moment. So the TLT, that's had a major drawdown of roughly 50% now, which is one of the largest drawdowns in history. And it's the first time in history where the bond market and the stock market, 2022, crashed at the same time of that magnitude. So it's quite a strange event that happens. Usually when bonds go down, equities hold their price or go up, or vice versa. So we're in a interesting phase. And the reason being is during the last Federal Reserve meeting, Jerome Powell stated that interest rates are going to stay higher for longer. So they held interest rates steady, which was, I guess, widely expected. But on their projections going into 2024 and 2025, they're now expecting rates to be slightly higher than what they initially forecast. So that's why we're now seeing interest rates, or I guess yields on the US 10-year surge higher and bonds decrease in value, because the market's now pricing in higher for longer from the Federal Reserve.
Is it possible because of the bonds go lower, yes, the bonds go lower, that we get a capital inflow from investors that think that they are very cheap to buy now?
Yeah, I mean, looking at the chart, it's an area that does look attractive for long trades, but there's that saying that you don't want to catch a falling knife.
Yeah.
And what you really want to kind of watch out for is for a change in tone from the Federal Reserve. Starting to see it at the moment. So we were in one of the most aggressive interest rate hiking cycles in history. They held during the last meeting, but they're now saying higher for longer. If we then get a pivot from the Federal Reserve and they move from quantitative tightening back to quantitative easing, there'll be a major reversal on the bond market, on cryptocurrencies and equities. So definitely this could be a trade or an investment to watch going forward, but it isn't one that I'll be looking to touch right now. I think it's still too early to tell when that reversal is going to occur.
Yeah, and besides that, when you look to the oil price, it's crazy how the oil price rises or rallied a couple last couple of weeks, and that's also a metric to see that inflation will come back higher. And because of that, I think also that the interest rates go also higher in the coming months. It's not going lower. And the Fed always say they are data dependent.
Yeah.
And because of that, I think they're gonna raise the rates in the next FOMC meetings in the beginning of 24. What do you think about that?
Yeah, you raised a couple of good points there. So I'll touch on the Federal Reserve and data first. The Federal Reserve need to see a weakening of economic data before they can really truly consider reducing rates or stopping hiking rates. So that would mean an increase in unemployment. Unemployment in the US is around 3.8% at the moment, which is near record lows. They need to probably see a weakening of non-farm payroll data, JOLTS data, and job openings data. So they need to see a weakening of the economy, which is really why they raise interest rates to, I guess, push the US into a recession or to, I guess, bring some heat off the economy. Now, if we touch on the oil market, interestingly enough, when oil was north of $100 a barrel previously, before it declined back to kind of 80, 70 area, the US decided to unload their strategic oil reserves at that level to help bring down the price of oil. Now, the US is, I guess, strategic oil reserve are now near record lows. So they don't have, so they're also going to have to start accumulating oil again to refill the strategic oil reserves, which ultimately is inflationary because it's going to be reducing the supply in the market and they're going to be increasing demand. Pair that with the fact that OPEC are also looking to reduce supply. Unfortunately, they're both supporting higher prices in oil over the short term.
Okay, yes, we see that also in the technical way on the charts. Yeah, and the global liquidity is also down. It's not that we get a new inflow of liquidity in the markets. Yeah, Yes.
Yeah, I've got a second slide to show with the liquidity, so maybe we can loop back to
Yeah,
liquidity.
perfect.
And we'll touch on that as well. And I guess maybe some of your viewers are wondering why we're on a crypto show talking about, the US economy, inflation, interest rates, but it does have a direct impact on the US dollar index and Bitcoin. And here is a visual of a clear inverse correlation over the short term. So when the dollar index topped in November 2022, we had a rotation out of the US dollar index, out of the global reserve currency, and back into risk assets. And it was also at the time where we're seeing bank runs in the US. So that also favored a move into Bitcoin in particular. Bitcoin bottomed roughly the 7th of November 2022. We had a 100% rally into that 31,000 resistance level. But since the 13th of July, we're seeing a major rotation back into the US dollar index, and we're seeing downside pressure come into Bitcoin. Now, Bitcoin, to be honest, has held up relatively well considering the size of the move on the US dollar index. Bitcoin's only really moved from 31,000 down to 26,000. It's now hovering around 27,500. It's actually had a nice rally over the past couple of weeks. So Bitcoin's holding up relatively well. But ultimately, if the US dollar index continues rising, that's not great for Bitcoin and other risk assets at the moment. So, although we feel we're coming towards the top end of the Federal Reserve rate hiking cycle, we really need to start seeing signs and language of a pivot or a move away from quantitative tightening for Bitcoin to flourish, I guess, in going into 2024.
Okay. You think they will put liquidity in the market?
I think at some point they may need to. At the moment, with their quantitative tightening, there is a really interesting chart that I'll just show, Tim. Bear with me 2 seconds.
Yes, when you look to the global liquidity and the S&P 500, you see it's like one-on-one what the price does. I think when investors see that there is more liquidity in the market, or they put quantitative easing on, the quantitative easing machine, investors get more trust in the markets and put the money back on stocks and that kind of stuff.
Most definitely.
Yeah.
So this chart, this is global net liquidity. So it's taking a look at the Federal Reserve, the Bank of Japan, China, the ECB, and it overlays the S&P 500, nearly perfectly. So it really goes to show how central bank money printing or quantitative easing really benefits risk assets. And when we're on the other side of the coin, when they're reducing the money supply and they're withdrawing liquidity from the system, it's only going to be negative for risk assets. And it's hard to see a reason why risk assets are going to rally and continue going higher if they continue raising interest rates. But, at the moment, there's a lot of pressure on the Federal Reserve, especially where the bond market is. There's a lot of banks, pension companies who are holding massive, large amounts of drawdown on these government bonds because of the surge in interest rates at the moment. So at some point in time, over the next maybe 6 months, we may see a major Fed pivot and a slashing of interest rates if we do move into recession. Historically speaking, a recession has forced the Fed to slash interest rates and provide liquidity to the system. So if we go on previous, bear markets and previous recessions, that may have to unfold again to provide support to the financial market.
Yes, I have here also a live chart. You see it here also. The blue line is the global liquidity.
Yes.
It's now pointing down, and then you have the red line is the S&P 500, and you see here also, like I said, we see here a switch beneath year on year, and when we look to the percentages, and here you see it also, and when that happens, you see a big move in the global liquidity actually every time. And because of that, I think they will put the global liquidity back higher. And I think that's a good thing for risk-on assets like Bitcoin and the S&P 500 stocks in general. Yeah, I'm very curious what we're gonna see in the next coming months. But when you look to the overview of the market, you see the Bitcoin halving, you see a switch maybe in the global liquidity, a decorrelation with the dollar, Bitcoin and the dollar. I think there are very interesting times when we look to these factors in the market. It's
I agree. You know, next year I think there are some major fundamental events that are going to take place that could potentially provide a lot of liquidity to the system and provide the next leg higher. So although on the face of it, you know, it doesn't look great from an economic perspective, but just because the economic perspective doesn't look great doesn't mean asset prices can't go higher, and they won't go higher. So yes, we have the halving event coming, April, May 2024. We have the potential of Bitcoin spot ETFs towards the end of the year, early next year. We have a potential recession or a pivot from the Federal Reserve and central banks around the world when they move away from raising interest rates to possibly pausing, reducing rates. So 2024 could really be a big year for Bitcoin in particular, and other risk assets. You know, there could be another blow off top type scenario on the S&P 500 and NASDAQ if we do get the Federal Reserve turning the money printers back on to support the financial markets. So yeah, there's definitely a lot happening on the grand scheme of things that could impact the market positively.
Yeah, when we look to the DXY, we see on the monthly very important levels, and I think we have a disbalance on the DXY. When we hit that disbalance on the monthly, we get a retracement down, and from then I think Bitcoin and stocks will get back up. I think that will give them some room to grow actually. When we look to the on-chain data, because we look also to the long-term hodlers, we see this. What's your take on this, Anthony?
Yeah, so what we're seeing is the long-term holder supply is now reaching record highs, which is a very bullish sign for Bitcoin. So historically speaking, the long-term holder supply, I guess the last high was around 78, 77%, just there where you are, Tim. So now I believe we're just north of 78%, if I'm not mistaken. Now, what this indicates is long-term holders who have historically positively predicted when to buy and when to sell Bitcoin are now accumulating Bitcoin at record levels. So they're not selling, they're accumulating into these lows, which is a really positive sign going forward. Now, if you were on the other side of the coin, when should I sell my Bitcoin or when should I trim down some profits? You essentially want to be looking for the long-term holder supply to reduce rapidly. I believe it's less than, I guess, 60% every year. You want a large decline, and that should raise an alarm bell for you to start trimming down some profits if long-term holders are trimming down their exposure to Bitcoin.
Yeah, but also when you look to the bottoms, Anthony, you have here in the beginning of what year 11, you have a nice bottom on the long-term hodler supply. When you look to the next one, you have also a bottom but higher, like a higher low. Here also you can put a trend line on this, and I think it will be less lower than the previous one. And because of that, I think you must look higher in the next wave for scaling out, because the mass adoption on the Bitcoin network gets also bigger, and people believe it that is like an insurance on the inflation. Bitcoin is like an insurance on the inflation, and I think a lot of people gonna hold for the long term, like investors hold ETFs for the long term, of the S&P 500 for the long term. I think Bitcoin is the same principle in that way.
You think about what the long-term holder supply is, Tim. It's someone holding Bitcoin for longer than a year. So as time goes on, naturally, people that held Bitcoin, 4, 5, 6, 7 years ago, their profit price of when they bought Bitcoin has gone way past what the price is today. So they don't necessarily need to sell that Bitcoin. They're now comfortable holding that Bitcoin long term. But anyone that bought the Bitcoin maybe 2 years ago could be in a loss. So they may still want to sell that Bitcoin. So yes, as time goes on, naturally speaking, there's going to be higher lows in the long-term holder supply selling Bitcoin.
Yes, indeed. I'm gonna look to other ones. The halving progress. Yes, here we see it nicely. Yeah, you have here the halving 3, and we are now the halving 4, and now we are how many blocks? You must count the blocks. But I don't know. Yeah, it's you see here so in the visual that the halving is very short term, in May, I think, or April.
Yeah, it's between April and May. It can move depending on the number of miners that are online. So if more miners come online, the halving event can become slightly sooner. If less miners are online, it might be slightly further away. But what I would say is don't expect any major fireworks before the halving
No,
event.
no, no.
Yeah,
It's like
this
three
is the
months.
accumulation phase. Yeah,
Yeah, I did the research on that cyclical, and I saw that the halving starts. The price action starts after 3 months actually.
yeah,
The real price action. It's like
yeah,
3 months after the halving, post halving, that we see some firework, and before that, actually altcoins do it better.
yeah.
That's
Correct.
my opinion. But that's on your own risk, of course. But we see here that we are 85 percent in progress, like
The
15,
halving event,
50%.
historically speaking, Bitcoin has bottomed 400 days prior to a halving. So that would fall in line with the current Bitcoin low in November
Mm-hmm.
2022, roughly speaking. So that kind of ticks the box there. And historically speaking, Bitcoin has topped out 1.5 years post halving. So that indicates late Q4 2025 as the next potential bull market peak. So we still have plenty of time to accumulate into the next bull market.
Yeah, nice. Here you see also the quarters per year. It's also very interesting to look at. And you see, yeah, in quarter 4, you see mostly downturns. And we are now going in quarter 4. But yeah, we will see. Here you see a big move up. But maybe we get first a move down to the 23 level, and from there we go back higher. That's possible in my opinion, but we're gonna see. If we get a spot ETF, it's not for October, but I think for January the 15th, or March the 15th. That are the two dates where I look to at this moment.
I would say short term October. October is historically bullish for Bitcoin. There's only been
Mhm.
2 Octobers where Bitcoin has had a negative return. But yes, we may have a positive return in October, a tail off going into Christmas before the halving event early next year, and the spot ETF next year. So yeah, I agree. I think we may see some choppy sideways downside pressure on the market in the short term over the next sort of 2 to 3 months going into year end.
Yeah. Have you other catalysts where you want to talk about
Yeah, yeah.
for Bitcoin?
100%.
Okay, nice.
This is a great visual in terms of what can potentially be achieved with a Bitcoin
Yes.
spot ETF. Now, I guess the spot ETF could be a game changer. Okay, look what happened to the gold market previously in roughly 2002, 2003. Now, the first State Street Corporation launched the first US spot ETF, SPDR Gold Shares, on November the 18th, 2004. The fund soared past 1 billion in assets during the first 3 days of public trading. So the ETF can really open the floodgates to institutional money and high net worth money going into that particular spot ETF. And the reason why the spot ETFs are so crucial is because the spot ETF actually has to go out and own that underlying asset.
Yeah, indeed, indeed.
When a spot ETF does get approved, I believe it's just a matter of time. Pair that with the halving event next year, there's going to be some major supply shocks coming into the market. Now, I'm not saying the same thing is going to happen to Bitcoin with what happened to gold there, but we're starting to get a bit of momentum. We're seeing a de-dollarization happening globally. People are losing faith in the fiat system, and people are wanting to use Bitcoin as a potential hedge against risks to other areas of their portfolios. And I think, most investors, even at the institutional level, will have some form of digital currency or digital investment in their portfolio over the next couple of years. So adoption is growing aggressively at the institutional level at the moment.
Yeah, and also when you look to other institutions like Fidelity, BlackRock, Valkyrie, you have a lot of institutions that want to go for a spot ETF. When you look to them, yeah, it's if you look to the global net worth of these institutions, it's like 27 billion. It's a lot. When you take just 1% to the Bitcoin market, it means a lot for the supply shock.
No, I think combined they must hold, is it north of $1 trillion in assets?
A trillion,
those,
yes. 27 trillion, yes. For our in Dutch is 27 billion actually. It's
okay.
very strange. Yes. But it's a lot when you count the bitcoins that they can buy with just 1%. Yeah, it's crazy. And because of that,
the BlackRock CEO Larry Fink came out saying that Bitcoin is going to transcend any one currency, similar to, it's going to overtake the US dollar essentially at some point in time. So we're seeing a major pivot from institutional leaders like Larry Fink, like the JP Morgan as well. So yeah, it's going to be interesting to see how this plays out. Which ETF gets approved first will get the early advantage as well. So yeah, it's going to be very interesting. I know there's been some recent news about Ethereum ETFs coming out as well over the past 2 weeks, which is interesting. So yeah, a lot's happening at the institutional level with adoption at the moment.
And also a little bit off topic, when you look to the spot ETF, Elon Musk said before, if there is a report or investigation about the how do you say it, ESG Bitcoin, like that it's better for the global how do you say it, global
economy,
yeah, like that's is energy friendly. They gonna accept Bitcoin again, and now Bloomberg made a report from the Bitcoin energy, and that was very good. And I think because of that, maybe Elon can accept Bitcoin again with Tesla or Twitter or X actually.
I think it's a matter of time, to be honest.
I
think Elon knows that Bitcoin is run. I think it's estimated that 60 to 65% of the Bitcoin mining market, is run on renewable energy. So it's actually one of the greenest industries in the world in terms of its green energy consumption. And not only that, but Bitcoin mining provides numerous benefits, like I mentioned before, in terms of providing grid stability. So if you think of renewable energy, like solar, captures the majority of that energy during the middle of the day. So we have a major supply during the middle of the day. However, demand for energy is generally early morning when people are getting ready for work, and late at night when people are home from work. So we have demand either side of the energy supply curve. So what actually happens is we get a lot of wasted energy from solar companies because they can't store that energy. So Bitcoin mining has an ability to stabilize the grid by consuming that wasted energy and then redirecting energy back to the grid when there is a supply shock or an increase in demand, of energy in the grid. So yeah, there's a lot happening in the mining market. I do encourage people to research about it. Not that I'm saying it's a good idea to go and mine yourself. You definitely need a data center and low energy prices, but it's very fascinating how it all works. And there's a bit of a shift coming in terms of people's thought processes to Bitcoin mining and how it's impacting the market, I guess.
Yeah, indeed. Very interesting times. Yes. Do you have other insights that you want to share about Bitcoin?
There's one more chart I wanted to touch on because last time we spoke about Solana. So
Ah,
I
yeah,
thought
yeah,
it was
okay. Solana.
good to come back and revisit Solana.
What do you think of the unlock from FTX? They have
Um,
a lot of Solana. Okay, a lot of Solana are also locked and available every month. But do you think it will impact the price on long term?
I think we're going to have to wait and see in terms of how that's going to impact the market. It's hard to know whether that's a substantial enough amount to negatively impact the market. We're seeing Solana have positive institutional inflows.
Hmm.
So we're still seeing people wanting to come in and accumulate Solana despite what's happened with FTX. I think a lot of what's happened with FTX is already priced into the market.
Yeah.
So, we had that FTX fiasco during the bear market. So I don't see that impacting the market as much as it has done previously.
Okay. I
Can you
will
see my
add your
screen?
Yes, yes,
Great.
perfect.
So I think last time we spoke, Solana was just moving higher from this ABC correction. And since then, we've had a move into the 31.5 area, which is a new high, so a higher high. We've now had a pullback,
Hmm.
and we're just moving higher now. So basically, we have a 5-wave bullish rally over here to form wave 1 of a bullish sequence, an ABC correction, which ticks the box for a corrective decline, and to form wave 2. And potentially, we're now seeing a 1, 2, and we're hopefully going to start building to the upside to see a 3, 4, and a 5 to form wave 3. Okay. So we have our bullish invalidation level now at 12.82. I have a short term wave 2 invalidation level at 17.39. So if I'm trading this, I'm using 17.39 as my short term stop loss for a long position, but I'm also using 12.82 as my bullish invalidation level. So there is a possibility we get one more low, a higher low than 12.82 and go higher.
Hmm.
But I'm using that wave 2 level as my invalidation level in the short term, which is 17.39. But as soon as we get above the previous wave 1 high, that it's hopefully going to confirm that we're in a 5-wave bullish sequence to the upside, and we're building waves now to the upside. So the price action's unfolded further. The bullish structure hasn't been invalidated, and we're starting to see a bit of a aggressive move to the upside, which is a good sign considering how negative I feel about the rest of the market, especially with what's happening with interest rates. So yeah, I'm monitoring this. I'm accumulating Solana as well as Bitcoin. It's probably my top altcoin pick at the moment,
Yeah,
going
mine too.
into the bull market. So
Yes, I have two coins where I look to now, and that's actually Solana and also Chainlink. Chainlink, I tipped it 2 months ago. I saw it and it was very compressed, very nice price action. It built a nice consolidation in the lows. And now, yeah, we saw a movement of 30%. The same with Solana. Actually, in the previous call, I mentioned the $18 level. You also, we had the same level.
yeah,
And we see there also a reversal. It's crazy to see that we tipped that level almost exactly. But yeah, it's also a little bit luck maybe. But yeah, it's a nice price action to see. There was a lot of support there, and from there we saw a nice healthy price action. It's perfect to see, and I think also that we gonna break the 39 level or 45 level to
yeah.
get that wave that you can count on. I think
Hopefully, wave 3 is generally the largest, most aggressive in the cycle.
okay,
So it
yes.
can be quite a quick, aggressive wave. So we need to see how it unfolds. But yeah, wave 3 could potentially take that a much higher, towards that sort of 60 area over the next maybe 6 months or so.
Yeah,
If this plan is correct.
another question for Solana. You spoke about Ethereum the ETF for Ethereum, the futures, I think. What do you think? Actually, Solana and Ethereum are exactly the same type of coins, layer ones. Do you think also that we can get Solana futures ETF in the future?
I can't speak about that, but I recently did a article on Solana. So bear with me 2 seconds.
Yes, okay. There, yes.
There is
Always
a hell of
nice
a
to
lot
read.
happening on Solana. So this was posted September the 11th. Okay, so Solana has had 3 major developments over the past couple of months. So Visa announced it's expanding its stablecoin settlement capabilities with Solana, which is a huge move. We had Solana Pay, which is a payments protocol developed by Solana Labs, which now integrates with Shopify. Now, if we take a look at this one in particular, according to its website, Shopify accounts for 10% of all e-commerce in the United States and
Crazy, yeah?
444 billion of global economic activity. Now, there are over 11.5 million accounts are now active on the Solana ecosystem. Now, what's actually happening here is Shopify businesses can now receive payment in Solana, okay, which makes it a lot cheaper than them using fiat processing systems. So a business can pay for every transaction between 1.5% and 3.5% of their revenue. On the blockchain of Solana, a transaction typically costs a fraction of a cent.
Yeah, it's very low, huh?
So this is going to increase the revenue opportunity for multiple companies on the Shopify ecosystem and provide them with a larger revenue share of the money they're generating. Outside of that as well, MakerDAO, the creator of the DAI stablecoin, proposed to fork Solana to build its new chain, its new chain called New Chain as well. So there's definitely a lot happening on the Solana ecosystem. So despite the major decline in Solana, it had a 96% correction. It's had a nearly, was it a 300% rise so far since the start of the year?
Indeed.
So
It's an opportunity.
Yeah, it's looking positive, and we're now seeing more institutional. It's the second highest in terms of institutional inflows for the year, behind Bitcoin. So it's Bitcoin and Solana. So Solana is really becoming an institutional favorite at the moment, and it's not surprising based on what's happening behind the scenes.
Yeah. Okay. Okay, I see what you want to mention. Maybe there is a possibility that we maybe get a Solana ETF futures, maybe.
Who knows? That could be another big one coming forward.
Yeah. Okay, perfect. Very nice to see what you also summarized for us as community. I think that's was that all of the insights for you from your side?
Yeah, that's everything from my side at the moment, Tim.
Okay, I have nothing to add on that because the market is very sideways at this moment. It's not bowing, but it's pretty quiet in the crypto space. Next time is in October, November. We do a new call. Anthony, I want to thank you for your time, for your expertise, and for the nice insights that you make for economy and also for us in a particular way. Yes, is there something you want to add or to say before we before we close the call?
No, at the moment, I think it's just a case of being patient at the moment in the market, and let's see how the interest rate pans out with the Federal Reserve as well. But, I am personally accumulating cryptocurrencies at these levels. So, if we do see lower lows, it's an exciting opportunity for me. And that's how I'm personally attacking the market at the moment.
Okay, I want to thank you, and I want to thank the audience to listen to our call. Don't forget to hit the like button and also the subscribe button to follow our YouTube channel. Follow also Anthony on LinkedIn. He does do he does nice posts, nice insights on LinkedIn, and it's very nice to see also. Okay, see you next time, Anthony, and thank you for your expertise. Bye.
Thanks, Tim. Cheers.